Hello, my name is Steve Bigelow with the Candlestick Forum. We've seen this market kind of waffling or consolidating for the last few days, but that doesn't negate the fact that there's some sectors that are still trading extremely well. As you can see, the Dow, after getting up here in the overbought area and moving away from the T-line, closed today right smack dab on the T-line. Not unexpected. Now we have at least a visual analysis of what to do based upon tomorrow's trading. If they start trading lower, that means they've ended the uptrend right in this area. Same scenario over here on the NASDAQ. As you can see, the T-line has been acting as a support level to the point where the NASDAQ and the S&P 500 came right smack dab to the T-line today and bounced back up. The assumption based upon that information is we're still in an uptrend. However, as you can see, there's starting to be a little bit of consolidation up here, especially up in the overbought area. So that is also evident in the biggies that are still producing uptrending moves like Tesla. So this is where identifying a fry pan bottom breakout has a very simple trading rule. You stay long until you see a sell signal and a close back below the T-line. That's your fry pan bottom T-line combination rule. And look at the evidence. The fry pan bottom illustrates that there's strong investor sentiment when it breaks out. Look at what Tesla did today when the market was selling off or had sold off pretty strong during the day. That's why we have pattern expectations. Our recommendation on SDGR was based upon a fry pan bottom J hook. And again, look what it did today based upon the fry pan bottom breakout right here at this level, trading positive. So the candlestick signals and patterns aren't something that are arbitrary. They're showing you where the bullish or bearish sentiment is with great enthusiasm. And a pattern breakout like a fry pan bottom illustrates that. This is why our training in our chat rooms every day is looking for things that are causing a breakout situation. SOUN, one of the artificial intelligence stocks in that sector, that broke out today with kind of a doji sandwich through an obvious resistance level. Same scenario over here on CXAI. When it did this breakout from the 50, consolidated, notice the slow curve. This was setting up for the fact that if it broke through this downtrending resistance level, we're probably in wave 3. Everything we identify on a candlestick chart illustrates where the strong investor sentiment is coming into with much more enthusiasm than just merely sideways moving stocks, and when the timing is for getting into a trade. So positive trading on this one tomorrow would tell us we're probably in wave 3 that should break out through this level. And anytime we see that breakout move, like we saw in PLTR, I mean, that best friend signal, J-hook pattern, told us we could be buying. Now, here's the most relevant factor of the T-line. It keeps your emotions out of your trading. If you use the basic assumption that the T-line acts like a natural support and resistance level of human nature, it keeps you from getting whipsawed in and out of positions. As long as it's staying above the T-line, we'll stay long on this position. Same scenario on the bearish side. Whenever we see strong sell signals, like in Daku, we started going short because that tells you there's a great factor in the bearish sentiment, strong downtrend. Or in PI, this is what we call observe the obvious. When you see sell signals in the overbought condition, right at a level that everybody else is watching, the probabilities that it's going to continue to trade to the downsides is extremely strong. Where's our first target? Right here. Where's our second target? If this is wave 1, Wave 3 is going to be down here someplace. Everything we look at on a candlestick chart is just the candlestick signals that have been identified by the Japanese rice traders as strong indications of what's going on in bullish or bearish sentiment. The patterns are relevant. Our recommendation to short ACLX was based upon this big dumpling top. You could see how it was forming and where you started shorting right in here. They didn't hold the 50. Where do you think the next target is? Down here at the 200-day moving average. Everything in a candlestick chart is just common sense logic that has been identified by the Japanese rice traders over the last 400 years. All we're doing is taking advantage of that information, which puts us in high probability trades, especially with market conditions, not knowing whether we're heading up or down. It's logical to have some short positions on as well as long positions. That'll be it. We'll see you in the chat rooms.